The White House is touting the investments global tech companies have committed to making here in the United States.
Chinese officials say if the U.S. insists on damaging its interests, they will retaliate and fight.
Let's get straight to the heart of the matter. Apple's airlift of 1.5 million iPhones from India is a calculated defiance of Trump's trade war onslaught. As of April 2025, Trump's tariffs on Chinese goods have skyrocketed to 145%, up from 54% just months earlier, threatening to choke Apple's supply chain. A Reuters report lays it bare. Apple's scrambling to deliver its latest iPhone models to American consumers without being crushed by duties that render Chinese imports toxic. But why India, and why this audacious logistical leap? India's rise as Apple's new frontier is no accident. It's a masterclass in economic survival. India offers a potent cocktail of advantages that China can't match under current conditions. Labor costs are a game changer. Indian factory workers earn $1 to $2 per hour, compared to $5 to $7 in China, according to the International Labor Organization. This gap translates to billions in savings for a company producing 200 million iPhones annually. Then there's trade diplomacy. India enjoys a most favored nation status with the U.S., facing tariffs as low as 2% on electronics, while China's 125% wall is a death sentence for profitability. Apple's been laying the groundwork for years. Since 2020, its partners Foxconn, Pegatron, and Wistron have pumped $10 billion into Indian factories, boosting India's share of global iPhone production from 1% to 10% by 2025. The Chennai and Bengaluru plants are now churning out iPhone 16 models, with 15 million units assembled in Q1 2025 alone. The 600-ton airlift, equivalent to 3 Boeing 747s packed with 1.5 million phones, isn't a stunt. It's a signal that Apple's doubling down on India to shield its $2 trillion empire from geopolitical fallout. But let's not oversimplify. China remains the linchpin of Apple's supply chain. Shenzhen's factories produce 70% of iPhones, supported by a sprawling ecosystem of 1,000 suppliers delivering everything from chips to camera lenses. China's efficiency is unmatched. Plants can scale from 0 to 100,000 workers in weeks, a feat India can't replicate yet. Apple's move isn't about abandoning China. It's about diversification. By spreading production across India, Vietnam, and Taiwan, 5% of output each, Apple's hedging against a worst-case scenario, say a Chinese export ban or U.S. sanctions cutting off access to Shenzhen. The tension here is electric. Apple's caught between two superpowers, each wielding economic weapons that could cripple its operations. China's stability is tainted by tariff risks, while India's potential is hobbled by logistical bottlenecks. Ports handle just 20% of China's cargo capacity. The airlift itself cost Apple $50 million, per Logistics Insider 2025, a price it's willing to pay to avoid duties that could add $200 per iPhone. This isn't just about profit. It's about survival in a world where trade wars dictate corporate destiny. Zooming out, Apple's pivot reflects a broader corporate exodus. Samsung and Dell are also eyeing India, with $5 billion in planned investments by 2027. But India's not a plug-and-play solution. Power outages disrupt 10% of factory output, and bureaucratic red tape can delay plant approvals by 18 months. Apple's betting on India's promise, but it's a high-risk wager. Failure could strand billions in sunk costs, while success could rewrite global manufacturing's map. The U.S. China rift has forced Apple into this gamble, and the world is watching to see if India can deliver. Now, let's confront the catalyst of this chaos. Trump's tariff crusade against China, a scorched earth campaign that's reshaping global trade. Since April 2025, tariffs on Chinese imports, steel, aluminum, electronics, have surged to 145%, a historic escalation from 54% in early 2025. Trump's rationale is unyielding. China's trade practices, currency manipulation, IP theft, and export subsidies have bled America dry, costing 3.4 million U.S. manufacturing jobs since 2000. His mantra, repeated at rallies, is blunt. We're in a war, and we'll win it. But is this economic warfare or a catastrophic blunder? The tariffs are a sledgehammer, and American consumers are feeling the impact first. iPhone prices could leap 30 to 40%, with Rosenblatt Securities estimating the iPhone 16 Pro Max climbing from $1,599 to $2,300 under a 54% tariff, potentially $2,800 at 125%. This isn't theoretical. 70% of Americans expect tech costs to spike in 2025, per a Pew Research poll, with 51% planning to delay gadget purchases. Beyond iPhones, tariffs hit 60% of electronics components, adding $100 billion to U.S. import costs annually. The middle class is squeezed, with household budgets stretched by an extra $500 to $700 yearly. Wall Street's reeling too. The S&P 500 dropped 4% in a week post-tariff hike, with Apple, Microsoft, and Amazon shedding $300 billion in market cap. Why? Tariffs disrupt supply chains, forcing firms to reroute production or absorb costs. Apple's airlift is a case study, $50 million to bypass duties, only to face higher freight rates and India's shaky logistics. U.S. exporters are collateral damage. China's 84% retaliatory tariffs on soybeans, cars, and whiskey cost $20 billion in 2025, with farmers and automakers slashing 50,000 jobs. China's counterattack is chilling. Beyond tariffs, Beijing's hinted at selling $1 trillion in U.S. Treasury bonds, 20% of its holdings. This could spike U.S. interest rates by 1 to 2%, raising mortgage and loan costs while tanking stocks. A $2 trillion market loss isn't unthinkable. China's also tightening rare earth exports, critical for 80% of U.S. tech components, threatening shortages. This is brinkmanship on steroids, with each side betting the other blinks first. Trump's defenders argue tariffs protect American workers, aiming to revive Rust Belt factories. Since 2020, 775,000 manufacturing jobs returned, partly due to trade pressure. But critics counter that automation, not tariffs, drives job gains, and the costs outweigh benefits. 300,000 jobs were lost to tariff-related disruptions in 2024. Trump's rhetoric, short-term pain for long-term gain, is losing traction as markets wobble. Pension funds, holding 15% of Apple stock, face $100 billion in exposure if tech tanks. The tension is existential. The U.S. seeks to dismantle China's manufacturing empire, but risks isolating itself. Allies like the EU and Japan, hit by secondary tariff effects, are distancing themselves. EU exports to the U.S. fell 10% in Q1 2025. Apple's India move underscores the chaos. Companies aren't waiting for Trump's win. They're fleeing to neutral ground, exposing the fragility of a strategy that punishes as much as it protects. Is Trump reshaping the global order or torching it? The answer hinges on how long markets and voters endure the pain. Now let's shift to the wild card, India, poised to capitalize on the U.S. China rift. Apple's 600-ton iPhone airlift has electrified India, with headlines proclaiming a manufacturing renaissance. India's pitch is irresistible, a workforce of 596 million, wages 70% lower than China's $1.50 versus $6 per hour, ILO 2024, and a government rolling out red carpets for tech giants. Since 2014, India's Make in India initiative has attracted $83 billion in electronics investment, with Apple's partners employing 200,000 workers across Tamil Nadu and Karnataka. But can India truly challenge China's crown? The numbers are promising but precarious. India produced 25 million iPhones in 2024, 12% of Apple's global output, up from 1% in 2020. Foxconn's Chennai plant, Apple's largest outside China, runs at 80% capacity with plans to double output by 2027. Tax breaks are a magnet. India slashed corporate rates for manufacturers to 15% from 25%, saving Apple $1 billion annually. Add near-zero U.S. tariffs, 2% versus China's 125%, and India's a lifeline for firms dodging Trump's hammer. Yet, India's not a plug-and-play paradise. Infrastructure is a choke point. Ports process 20% of China's cargo volume. with delays costing $10 billion yearly. Power outages disrupt 15% of factory output, forcing reliance on costly generators. Bureaucracy is another beast. Land acquisition for factories can take 2 years versus 6 months in China. Apple's airlift exposed these cracks. $50 million in freight costs could have been halved with better roads and ports. The tension is palpable. India's racing against time. China's fighting back, offering $30 billion in tech subsidies to retain firms like Apple. Beijing's loosened FDI rules, allowing 100% foreign ownership in electronics, aim to keep 80% of its $400 billion tech export market. India's window is narrow. It must reform fast or lose momentum. The government's betting big, $20 billion for new ports and 5G networks by 2028. But execution lags. Apple's move could spark a $150 billion manufacturing boom, creating 7 million jobs by 2030, per Niti Aayog. Failure risks relegating India to a footnote. Globally, India's rise stirs unease. Southeast Asia, Vietnam, Thailand fears losing investment. Vietnam's electronics exports grew 27% in 2024, but India's grabbing headlines. China's rattled too. State media warns of economic sabotage as firms like Dell and HP scout India. India's dream hinges on execution, balancing ambition with reality. If it succeeds, it could redraw global trade's map. But the stakes are sky high. One misstep, and China reclaims its throne. Step back, and the trade war's devastation comes into focus. The U.S. China clash is a $6 trillion showdown, with tariffs disrupting 18% of global trade, $2 trillion in goods annually. Apple's airlift is a symptom of a corporate stampede. 25% of U.S. tech firms plan to shift production to India, Vietnam, or Taiwan by 2027, per Gartner, 2025. But relocation's no panacea. Apple's $50 million air freight bill barely dented tariff costs, and rerouting supply chains takes years, not months. Consumers bear the brunt. In the U.S., electronics prices could rise 20 to 40% by Q4 2025, adding $600 to household budgets. Globally, 30% of iPhone components, chips, batteries still flow from China, vulnerable to Beijing's export curbs. A rumored Chinese ban on rare earths could halt 50% of U.S. tech production, spiking prices further. Shortages loom. Best Buy reported 10% lower iPhone stock in Q1 2025, with delays stretching to Christmas. Nations are realigning. India's gaining, but Vietnam and Taiwan are surging too. Vietnam's tech exports hit $120 billion in 2024, up 30%. Taiwan's TSMC plans $10 billion for Southeast Asian plants, hedging against China risks. China's countering with $250 billion in domestic tech investment, aiming for 70% self-sufficiency by 2030. Meanwhile, the U.S. is hemorrhaging. Tariffs cost 400,000 jobs in 2024, with 200,000 more at risk if markets crash. The EU's caught in the crossfire, with exports to the US and China down 12%, costing 50 billion euros. The tension is ideological: globalization versus nationalism. Trump's tariffs aim to shield American workers, but only 20% of manufacturing jobs lost since 2000 can return, per MIT 2025. Automation's the real killer. Globalization's unraveling. Supply chains, once seamless, now face $500 billion in annual disruptions. China's bond dumping threat, $1 trillion in U.S. treasuries, could raise U.S. borrowing costs by $200 billion yearly, per Goldman Sachs. Apple's pivot exposes the chaos. Firms are dodging tariffs, not solving them, leaving governments to clean up. Winners are scarce. India and Vietnam gain temporarily, but trade wars erode $1.5 trillion in global GDP annually. Consumers lose affordability, firms lose stability, and nations lose trust. The U.S. risks isolation, pushing allies toward China's orbit. Beijing's trade deals with ASEAN grew 15% in 2024. Apple's move is a survival tactic, not a solution, in a world where tariffs breed retaliation, not resolution. Trump's tariffs are torching the global economy, and Apple's India airlift can't shield anyone from the fallout. The Federal Reserve's warnings paint a stark reality. Inflation and unemployment are surging, threatening consumers, nations, and the fragile hope of India's rise. The Fed's sounding alarms. John Williams says tariffs will push inflation up 2% and cost 400,000 jobs by 2026. Prices are soaring. CPI hit 4% in March 2025, with electronics up 8%. iPhones could cost $2,600, a 60% jump, as tariffs hit 70% of components. Consumers are squeezed. 60% plan to skip tech buys, adding $800 to budgets. Apple's India pivot saves little. Chinese parts still drive costs. Jobs are vanishing. Tariffs tanked 200,000 export jobs in 2024. Think Iowa farmers, Michigan auto workers. Apple's U.S. staff face 5% cuts as logistics costs bite. India gains 30,000 jobs, but the U.S. isn't winning. Automation, not tariffs, adds factory roles. Trade's collapsing. Tariffs disrupt $2 trillion in goods, cutting global growth to 2.5%. India's maxed out. Ports handle 20% of China's cargo, stalling $1 billion in exports. Consumers face shortages. Retailers report 15% less tech stock. Walmart's iPhone shelves thin by Q4. Globally, China's rare earth curbs threaten 25% of electronics. India's consumers pay too. Gold's premium hikes, tech prices 5%. No one escapes. EU prices rise 80 billion euros. The tension's deep. Trump's protectionism risks stagflation, per the Fed. China's gold and bond threats could crash markets $2 trillion. India's dream falters. FDI dipped 10% amid chaos. Apple's scrambling, but tariffs and retaliation trap it. This is chaos. Consumers lose, jobs vanish, and nations fracture in a war with no victors. Apple's 600-ton airlift isn't just a logistics stunt, it's a flare in a darkening sky. The U.S. China trade war is redrawing the global map, with India emerging as a battleground for economic supremacy. Trump's 125% tariffs have pushed giants like Apple to pivot, but at what cost? American consumers face pricier iPhones, markets teeter on the edge, and China's bond-dumping threat looms like a guillotine. India dreams of glory, but it's a tightrope walk. Infrastructure and reforms must match ambition, or the opportunity slips away. The world watches, breathless, as tariffs, retaliations, and corporate chess moves spiral toward an uncertain endgame. Will India rise? Will China strike back? Or will the U.S. buckle under its own strategy? One thing's clear, this war's far from over. Tomorrow could bring headlines of Apple doubling down on India or China slamming new tariffs. Stay vigilant, because the tremors shaking global trade today could erupt into chaos tomorrow. Share your thoughts below. What's the endgame for this trade war?
It's been 1 week since Donald Trump announced his bold vision for destroying the economy, and guess what? His plan...
Wall Street is reeling, the Dow's plummeting, and the world is watching as this tit-for-tat trade war spirals into chaos. Buckle up. This is an all-out economic showdown, and no one's backing down. Let's rip the bandage off and face the brutal reality. Since 2018, Chinese investments into the U.S. have cratered by a staggering 90%, from a towering peak of $46 billion down to a pitiful $2.3 billion in 2025. That's not just a decline, it's a near-total annihilation, the lowest level in almost 20 years.
Starting tonight at midnight, the U.S. will tax imports from China at a rate of 104%.
Trump's tariffs aren't saving America. They're sinking it faster than China ever could. China has just slammed the brakes on every single investment into the United States, effective immediately. No warning, no hesitation, just a cold, hard stop. Real estate moguls, who built gleaming skyscrapers on the back of Beijing's billions, are watching their empires tremble. These firms are like engines sputtering without gas, teetering on the edge of collapse. The U.S. stock market's a bloodbath, 2 relentless days of carnage. The Dow's hemorrhaged over 1,700 points in 48 hours. with a single-day plunge of 1,000 points lighting up panic alarms from New York to Silicon Valley. This isn't a hiccup. It's a full-on economic heart attack, and Trump's tariff threats are the jolt that stopped the pulse. Why does this sting so